Welcome to episode 16 of The Coin Pod, a weekly podcast of conversations with professionals around the world who use, build, and study Bitcoin. I'm your host, Zach Full. Ethan Ackerman is joining me as my guest co-host for this episode, in which we chat about institutional investors entering Bitcoin, investing in altcoins, maximalism, and more with Mark Yusko, a fervent Bitcoin apologist, an active investor in the so-called crypto space, and CEO of Morgan Creek Capital. Thanks so much for joining me, Ethan. Before we go to Mark, can you tell me a little bit about your background, how you first learned about Bitcoin and cryptocurrency, why it piqued your interest, and some of the work you're involved in now?
Yeah, so I'm actually a sophomore here at Colgate University right now as an undergraduate, and I'm double majoring in math and economics. I found out about cryptocurrencies when I was a sophomore in high school about 4 years ago. I sort of stumbled across them by accident, but it was an instant attraction. I realized the potential they had to not only revolutionize, the way we do money, but also just the way the global economy works on a very large scale. That's sort of what drew me in initially. Over time, over a few months, I discovered sort of the trading aspect of cryptocurrencies. So I got very involved in the altcoin markets. I became, very, very involved with crypto Twitter. That's actually sort of how I'm, most involved with the community right now. My handle is @CryptoEthan. I generally like to post about, my thoughts on the market. Sort of very rarely I'll post specific trades I'm making. As I've sort of transitioned from high school to college and gotten more into my studies of economics, it's been really interesting to see sort of how what I study in the classroom relates so well to, what I do with Bitcoin and cryptocurrencies, particularly regarding monetary policy.
Awesome. Thank you. And that makes a lot of sense. And now, without further delay, here's Mark. Mark, thanks so much for taking the time to chat with us, answer some of our questions. We can't thank you enough for taking the time to do this.
Sure. Glad to do it.
Before we jump into some more specific questions, I sort of want to begin by mentioning that lots, if not most people, come to the Bitcoin space with inherent skepticism about it and the larger cryptocurrency idea in general. Can you tell us a little bit about how you sort of came to drink the Kool-Aid, so to speak, and understand the potential of Bitcoin?
Tesla, Kool-Aid. No Kool-Aid in crypto. Tesla, full of Kool-Aid. But no, it's a great question. I think coming to this space with skepticism or from a point of skepticism is actually a really smart idea or construct. So this happened for me over a 5-year period. Unfortunately, I'm not very good at doing things quickly or I'd be a lot more successful at it. But 5 years ago, a friend of mine who had started a hedge fund 11 years ago, Dan Moorhead, if you've heard of Dan or follow Pantera, but Dan came to me and said he was shutting down his hedge fund and he was going to start up this Bitcoin fund. And I was like, seriously, Dan, you're going to shut down a multi-billion-dollar hedge fund and focus on Bitcoin. And at that point, I had spent all of 20 minutes thinking about researching, talking about Bitcoin, and so had no business saying that, other than it didn't seem like really that, I guess now I think about it, that was 5 years ago. It was 2013. And I had a couple friends who had gotten involved but I just hadn't spent any time on it. But because Dan was doing this, I said, all right, look, Dan is a smart guy. He's a friend and I'll be supportive. And at the time, I made a decision, which in hindsight, not really psyched about, but I made it, which was you could either choose to be a gold miner or the guy who sells the picks and shovels. So there's a great story in the gold rush, right? If you were a gold miner, you had risk that someone with a bigger gun could come up and jump your claim, or all kinds of bad things could happen. Mine could cave in. But if you were the guy in San Francisco that sold jeans, Levi Strauss, or the guy who bought up every shovel in San Francisco and ran down California Avenue yelling, "There's gold in them thar hills," you actually made a lot of money. So I said, all right, I'm going to go picks and shovels. So Dan had two funds that he was thinking about. One was the Bitcoin fund. and one was going to be this infrastructure fund. And I said, yeah, I don't care about the Bitcoin fund. I'm going to focus on infrastructure because that's where all the money's going to be. And that's been great, right? Owned a little piece of Coinbase, owned a little piece of Corbit, great businesses, real businesses. Corbit just sold, I think, for 11x from original cost. Those are great outcomes. But clearly, I should have gone with the gold and the coins. And so that skepticism started to fade about 2 years later. My son was coming out of college at Notre Dame. And I said, why don't you go out to California and meet with Dan and meet with some of his companies? And he said, all right, I'll do it. It's not really what I want to do, but I do want to live in San Francisco, but, he hadn't spent any time on Bitcoin or blockchain or anything. So he went out and he did a little bit, and it just wasn't what he wanted to do. He wanted to do something else. And so he went to work for a big consulting company. And with this past Thanksgiving, we're together, and he said, all right, Dad, you were right. All right. I probably should have gone to work for Coinbase or something. But then he said, and he turned around, which was really funny. He said, yeah, but you didn't take the mortgage and lever up the house and put it all in Bitcoin either. So you're not as smart as you think you are. And I was like, okay. So fast forward from Thanksgiving to today, from 5 years ago, I was spending 1% of my time thinking about this, talking about it. 2 years ago, I was spending 5% of my time thinking about it. In November, I was up to 20% of my time thinking about it, talking to people about it. Today, I'm spending half my time, at least, thinking about it, talking about it, looking at ideas, looking at opportunities, talking to people like you. And that skepticism is gone. There's a great line from Sir John Templeton. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. And that's exactly where I believe we are in the public market world, where I made most of my career, is in complete and total euphoria. Just craziness. I mean, Tesla is the worst example of it. And here we are in skepticism, which is where bull markets grow. And so I think we're just at the beginning of what I think is a very long S-curve adoption in blockchain, Bitcoin, et cetera. So that's a very long answer. And you'll notice from things that's usually what I do. I just give long answers.
I guess going off of that then, do you think cryptocurrency has the potential to blossom into a major asset class, or do you think it's going to remain something that's sort of niche?
Great question. So I think absolutely it's going to become a significant asset class. Now, the question of niche versus major, that's harder, right? I mean, my thesis on Bitcoin in particular has all been around this store of value, gold equivalence idea. And even that, when you say the word 8.4 trillion out loud, it sounds like a lot of money. People forget that 1 trillion is $1 every second for 31,710 years. So a trillion's a big number. So 8.4 of those babies seems like a lot, but that's just a pittance in compared to the global equity markets, global bond markets, global FX markets. So, we're talking hundreds of trillions of dollars of assets out there. So I think it probably moves toward an accepted asset class, something like a gold or a commodities, but it's still going to be small, relatively speaking, to other primary asset classes, unless, and I will put a caveat here, it is possible that people realize the benefits of the currency aspect, and Bitcoin itself would have to solve the speed problem, the transaction problem. And now that also means it could be something else, right? We could have, Bitcoin 2.0 or 3.0, and that's the great thing about open source versus the old school is you can just copy paste great ideas onto the main chain. But it's also possible that another technology will come up and solve the transactional element of currency. But the reason I'm so excited about Bitcoin itself is the network effect and what's called the law of increasing returns. Is the miracle of Bitcoin was 0.004 cents to $10. Right? That's the miracle. $10 to 100, not even that impressive. 100 to 1,000, not that impressive. 1,000 to 10,000, 10,000 to a million. Those are big moves. They seem like big moves, but those are not as impressive as surviving to become a network, a real network that people can participate in. So it's, again, long way of saying I do think it will become a significant asset class, whether it becomes a major asset class and whether it becomes the currency. I do think it already is a currency. A currency is just a store of value and a medium of exchange. So I think it is a currency. What I love about it is it tears down borders, right? I mean, if you think about globalization, true globalization, one of the problems is, why do we have a different currency if we travel all over Europe? Why do we, a lot of them have the euro, but you've still got Swiss francs and you've still got, other countries like Turkey that have different currencies. Why do we have that? Why isn't there just one universal, store of value and medium of exchange? So that could happen. I think governments will fight against it, but I think it's something we're all going to deal with going forward.
So I know Ethan and I differ a little bit on this, but I'm somewhat of a maximalist regarding Bitcoin, and I'm curious to know your opinions on just looking at this entire space with this exponential growth in the number of blockchains that exist now compared to even a year ago. And obviously not all blockchains are created equal. Not all projects are worth even the mental bandwidth, let alone investor capital to sort of help grow and that sort of thing. How do you look at this space with so many chains and Bitcoin obviously being the first, arguably the best on many counts? Through what lens do you decide which chains or categories of coins and tokens and dApps and all of this stuff are even worth looking at and investing in and helping continue to grow?
It's the $64 trillion question that we all want to know the answer to. And, if I had it, it'd probably be someplace tropical. No, I'm just kidding. You have to break the world into, and you guys know this, right? There's blockchain technology, right? The technology of it. And then there are all of the applications of that technology. And there I break it into three very distinct groups: cryptocurrencies, utility tokens, security tokens, cryptocurrencies. Everybody says, well, there's 1,700 cryptos. Well, no, they're not. And everybody says, well, there's going to be these government cryptos. No, there's not. A government can have a digital currency, but they cannot have a cryptocurrency because a digital currency is centralized, a cryptocurrency is decentralized. So you have to get that distinct and discrete about how you define things. And so crypto, I believe that Bitcoin is the king. I use the Saudi Arabia analogy, right? Bitcoin is the king, Ethereum's the crown prince, and then there's a whole bunch of princes that hate each other. And, a whole bunch of them will probably disappear or get jailed or whatever, but that's the way it is. And so there aren't that many cryptos, but there are a decent number. And a cryptocurrency, right? The key word there is currency, is something that can either have a store of value or a medium of exchange. A utility token, and that's where all these ICOs and all this, other chains and other projects, the reality is those are a whole different category of asset. Those are essentially displacing or disrupting traditional venture capital. You are investing in projects, it's crowdsourcing. And you think about that, a utility token is extremely different than a cryptocurrency. And some of them are just bad, right? You said not even worth your time, let alone your capital. Others of them might develop into really meaningful long-term businesses and be very valuable. Then you've got the problem of the ones that cross the line, and they're actually securities. And so those should be security tokens, and they should be registered, and they should function as digital ownership of some asset or some business. And I actually think that's where the biggest opportunity is in terms of just, it's my thing, hashtag tokenize the world. And Pomp and I, that's our goal, is you think about 14 trillion, there's that T word again, $14 trillion of assets change hands every year. Real estate, oil and gas, intellectual property, companies, $14 trillion. Today, we still live in the analog ownership world, physical pieces of paper. I mean, it's stunning to think that the same way that people were changing shares of stock in the 1700s we're doing today. They said, no, it's not the same. I'm like, well, no, it actually is. And yeah, there's an electronic version of that. There are QSIPs and there aren't as many people standing around the stock exchange actually trading the pieces of paper. Those pieces of paper still exist, and you have to sign a document to transfer ownership. And as we move to the digital age, that digital ownership of assets, that securitization of assets is going to be a monstrous opportunity. Now, those are going to have chains. They're going to have to decide which token they use, which protocol. And now there's all kinds of new protocols. We just invested in a interesting protocol that we think could be better than just using Ethereum as the core chain for this asset tokenization. So there's three separate places or three separate fishing holes. There are going to be big fish pulled out of all of them. Crypto, I believe, is going to continue to grow. The network's going to continue to expand. The value is going to continue to go up. And people say, well, there's no value. Like, what are you talking about? Yeah, there's no inherent value in a Bitcoin, which I always laugh. It's not gold and it's not a coin. Although every picture you see of it, it's a gold coin. There are no gold, there's no coins. It's like my joke about the Bernie Madoff hedge fund thing. Everybody says, well, it was a hedge fund scandal. I'm like, well, no, there was no hedge and there was no fund. I mean, it was just a Ponzi scheme. The guy was just a bad guy. So Bitcoin, I believe, is going to continue to have people gravitate towards it because it is the king, and success attracts success. And there's a professor, Paul Romer, who was originally at Stanford, then went to NYU, and then went to the World Bank. And I think he'll win the Nobel Prize someday for this thing called the law of increasing returns. And it basically explains the illogical thing that if you were going to open a Target, why would you open it across the street from Walmart? Or why would you open a Burger King right across the street from McDonald's? And you'd say, well, that would lower sales. No, it actually increases sales. So like if there's one gas station on a corner, you get X sales. You put two gas stations, you don't get 2X, you actually get 3X. You put 3 gas stations, you get like 5X. And if you put 4 gas stations, it's like some crazy increase because everyone knows that's where you go to get gas. Mm. And the same thing's true of these types of assets. The more people that get involved, the more valuable the asset. And that network effect kicks in. So I do think lots of money is going to be made in crypto, and it's going to come from both hodling and also from finding the other chains that can modify some of the things that Bitcoin is not good at. Monero and Zcash, you really want to be truly pseudonymous, if I'm pronouncing that right. Yeah, that's the right chain. Now people say, oh, but that's only drug dealers and bad guys. Maybe. But if I were a drug dealer or bad guy, I'd probably want to use cold hard cash rather than something that could ultimately be traceable on a chain. In fact, it was funny. I tweeted about that, and some prosecutor who'd been doing for 20 years tweeted out, yeah, I've prosecuted the worst of the worst. And they would always choose cash over any sort of electronic instrument. So crypto is going to have big fish. Utility tokens, look, I think there's some great projects out there, and I think there are going to be some great businesses. Augur's a great example. I think it has the potential, I don't know if it'll be the winner, but it has the potential to disrupt the entire options and futures business. It's an amazing thing if you think about it. I mean, I met Joey Krug the first time, and I literally took my wallet out of my pocket. I threw it on the table. I said, just take it all. You're just way smarter than me, and you should just manage all my money, and I'll just go, hang around and collect money for you to manage. I've only done that twice in my life before. Julian Robertson, famous hedge fund manager, and David Bonderman at TPG, the private equity firm. So there are these people in this space that are just so far ahead of everybody else that, I think there will be great things that get created there. Now, almost, what's the number? Like 800, almost $1 billion of fraud has been perpetrated in the ICO space. It's about $850 million. That's okay. That's not great, but that's no different than the fraud that goes on in the penny stock world. There's all kinds of people who for years have perpetrated scams by changing the name of a company for whatever the hot thing is, and they raise money and then they disappear with it. So money systems will always have bad people drawn to them, and this is no different. And then security tokens, as I talked about, I think is where the greatest opportunity for innovation, and innovation is the wrong term. Innovation is really in the utility token space. Security tokens is taking old school assets and bringing them into the digital age. So it's not really innovation. It's just application of a good technology to those assets.
I want to pick your brain about a bit of news that broke recently, and that's Goldman opening a Bitcoin trading desk. I'm honestly just curious to know what you think this means for large investors over the next 12 months and maybe a longer time frame even than that. And also if you've adjusted, in light of that bit of news and other growth in the space overall, if you have adjusted your 400,000 target price for Bitcoin at all, whether higher or lower.
It's again a really good question. So the price of Bitcoin, in my view, doesn't change until some other use case is, confirmed, or there's new technology that makes it possible. So remember, my $400,000 number comes from gold equivalents. So that's basically, $8+ trillion coming into the network. Divide that by, 20 million coins. Well, there aren't 20 million coins left. How many there are? 17 million, 18 million, whatever the number is. But it comes somewhere around that $400,000 to $500,000 number. Goldman coming into the business is interesting in that, one, look, all the banks have to say they hate this. Right? Jamie Dimon has to say it's a fraud. Everybody at the banks has to say this is horrible, because what is this trying to disrupt? Banking. Right? I don't need a bank. If I want to transfer you guys capital in the old system, I have to get your bank account number. I have to send you a wire, and you have to go to the bank and take it out. There has to be a trust institution. Now we don't need the bank anymore, right? We can just go direct on chain, transfer value. Good. So the banks have to hate it. Now, Goldman in particular, being and I mean this with all love and affection, the vampire squid that they always find a way to get into very profitable businesses. And what they're saying is they don't want to be a custodian of Bitcoin. They're not going to solve that problem for institutions. They don't want to be the creator of Bitcoin. They're not going into mining. They just want to be what they are really good at, which is broking. So they want to get in between people who have these big, blocks of capital that they want to either convert into Bitcoin or some other crypto, or convert back into fiat, and they want to take a spread. They've been doing that for years. They're really good at it, and it's a highly profitable business. So not surprising at all, they would say that. What's going to change the adoption rate and the usage of cryptocurrencies in particular, and then other, tokens, is somebody solving this custody issue. So right now, institutions are afraid because big custody institutions, State Street or Bank of New York or whoever, won't actually say, hey, we'll put our reputation and stand up for liability of saying we're going to custodize this asset, because they're like, you can't physically get the asset. I'm like, well, QSIPs of stocks, you don't really have an asset there either. Oh, but I could get one. Well, but you don't actually have one. The transfer agent actually has it. So you're customizing, a electronic entry, just like a Bitcoin entry. So I do think that needs to get solved. And Coinbase is working on it, and Kingdom Trust is working on it, and INX, that I actually trying to help out a little bit, is thinking about getting involved. So there are people who are going to solve this custody issue, but Goldman's entry, I think, simply facilitates the people who are already in the system trading big blocks. So it's really for the whales and the people who want to, maybe they want to convert from Bitcoin to Ethereum to do a bunch of ICO projects, or maybe they want to, who knows? But I don't know that will draw much new capital in, unless, and this could happen, unless people view it as a seal of approval. I was going to say a good housekeeping seal of approval, but you have no idea what good housekeeping is because it was long before your time. So it was a magazine that certified things, and they said, if we give you the good housekeeping seal of approval, then that vacuum cleaner is good, or that brand of spaghetti sauce is good, or whatever. But by Goldman entering, people will say, okay, this is legit, this is real, that's a real business, that's real people, smart people.
Do you think then that Goldman entering the space is a good thing, or do you think it will help bring liquidity or anything good in that regard?
I definitely think it's good, and I think it will bring liquidity. And the more things from the traditional world that move into this new world, the better. So if we think about, everybody said, well, what about futures? Aren't futures contracts going to wreck everything? And yes, the peak of the Bitcoin price was 4 days after futures started trading on the CME. Which says, oh, see, I told you. Like, no, that's really not it. I mean, that certainly helped some people get short, but if you look at the volume of futures, it's not massive relative to the ownership in the network. Basically, at 20,000, we were in a price bubble, not a value bubble, but a price bubble. And people can't. This is what I actually tweet about this all the time. The price, the daily price of a cryptocurrency doesn't matter. It's not important. It doesn't have information content. All it is the level at which two people decide to transact. And the problem is when things start to get really bubbly from a human perspective, meaning everybody at Thanksgiving looked at it going from $1,000 to $5,000 and said, oh my gosh, I'm missing it, I got to get in. And, Uncle Ned asked you over Christmas dinner, hey guys, what do you think about this? And you said, oh, Uncle Ned, you should get in. So he opened up a Coinbase account and boom, suddenly everybody wants to buy it. Well, if the bulk of the people don't trade their coins, right? They're just very happy hodling and they're just not interested in selling, then there's a limited number of coins for sale and more buyers, the price goes up. And John Burbank, who talks about this all the time, famous hedge fund manager now shifting into crypto, he says price is a liar, right? Everybody likes to think that price is right. No, price is a liar. Price is never right. It's either too high or too low. It's very rarely at the equilibrium point. Think about a pendulum swinging back and forth. How long does it actually stay in the middle, which would be the actual value? And so when we got to 20,000, it was too high. When we get to 6,000, it's too low. 10,000, it's kind of, if you look at the money that's gone into the network, you divide by the number of coins, you kind of get a number around 10,000, 11,000. I think it'll be closer to 20,000 by the end of the year. So that's how you have to think about the value. And then the price is just a reflection of supply and demand for the marginal coin, the incremental coin. And it's like people don't understand stocks, for example. You look at the price of Microsoft, right? What does it say? $85 or whatever. Yeah, that's if you trade 100 shares. If you trade 1,000 shares, you're not going to get $85. You might get $84. If you have 10,000 shares, you might get $82. If you have 1 million shares, there's not even a buyer for that. That's when you need someone like Goldman to come in and say, okay, we'll go find a block trade for you. Because if you try to pound 1 million shares into the traditional market, you'd lower that price to 75 or something. Well, there's somebody out there, and usually they are going to use a big institutional broker because it makes them feel comfortable and also quiet because it won't hit the tape. And so I think the same thing's going to happen here. You got a whale that, they've made a couple $100 million and then, all right, fine. I'll take 50 million out, but I don't want to be the guy, right, who gives up and is, is written up that he's selling. Says, all right, I'll do it through a big institutional block trade and nobody has to be the wiser.
I guess one question I had regarding, tokens in the ICO market. I know, you're very bullish on tokens, tokenize the world. That's great. But I think one thing in particular is there's been a lot of skepticism even within the cryptocurrency community about, a lot of ICOs recently, especially the fact that they're raising so much capital with, so few deliverables at this point.
Yep.
And I think I was wondering what your thoughts are on that.
Look, you're spot on. And the bad guys will go to where it's easy to raise money. So unfortunately, all the bad guys right now are in ICO land. They used to do all kinds of other bad stuff, like I said, penny stock issuance. But right now, ICOs are even easier. And so that's part of the problem. Second is there's this enthusiasm because people look at the past results, and there have been some really good projects that went up a lot. And if you were part of the pre-sale, you made even more. And so people look at that and say, oh, I want one of those. And look, human beings do two things really, really well. We buy what we wish we would have bought, and we're spectacular at that, right? We always want to buy the thing that's already gone up a lot because it makes us feel good. It makes us feel safe. It's like being at the center of the herd. All the good grass is out on the side of the herd, but you can also get eaten by a lion. So staying in the middle of the herd, all you're eating is a bunch of trampled down grass and dirt. But same thing is true here in that there are good ICOs out there and there are great projects, but then there are also going to be really bad projects. It is easier to raise money. There's a lot of capital. This is the other thing, and this is one of the things I get excited about. There's so much capital around the world that's landlocked, right? It's landlocked because of restrictions in terms of closed capital controls or closed borders or, all kinds of reasons why the money can't transfer. In the token world, those borders disappear. And so, these friends of mine that run blockchain capital, the Stevens brothers, they raised a token to tokenize their actual third venture capital fund, right? Really cool idea. And they raised $10 million in 35 minutes. And it came from 79 countries around the world. Why? Because people wanted access to U.S. venture capital, and those people sitting in Kazakhstan had never been able to do that before. And so it's a really cool thing, but it does, to your point, Ethan, it does allow people with very little substance who are good marketers to raise a lot of capital too quickly. And capital begets capital, right? If you see something on one of these sites that tracks the ICOs and suddenly a lot of people are going towards it, what are you going to do? It's like when everybody's standing outside a restaurant. You don't know if the food's any good, but if everybody's going in, it must be good. Now, the thing you always got to watch about restaurants, funny guy said this to me, he says, you should always go to the restaurant which all the fat guys are going to, because clearly that's where the food is good.
Do you have some sort of short witticism or something for professional investors, people who work in finance and aren't really part of the crypto anarchy or anarcho-capitalist subgroup or whatever, of which Ethan and I don't really identify with either, but some sort of like short witticism to people who are agnostic or skeptical or downright opposed to Bitcoin as a profitable investment or even a project with long-term success that you sort of pitch to them to maybe sort of wake them up and say, hey guys, reconsider your position?
Yeah, I think it all starts from that point. Look, 1988, there was this, crypto anarchist manifesto published. And actually that same year, the cover of The Economist predicted that we'd have a global currency. They actually called it the Phoenix. It was also a gold coin. And they actually said it would happen in 2018, 30 years later, which in 1988 seemed like a long time. Now here we are in 2018, and sure enough, we have a global currency. Who would have thunk it? And from 88 until 2008, when Satoshi-san, if it's Satoshi-san or whether it's a group of guys or whatever it is, or a government or the NSA, whichever conspiracy theory you want to pick, Satoshi said, all right, we're going to create this cryptographically, beautiful system, and it's going to become a currency. Now, it actually hasn't really become the currency the way it was originally anticipated. It really, to my point, is more of a store of value. It's digital gold. And what I say to people from my world, from the traditional world, we're actually raising a fund to try to bring people from the traditional world into this world, is they say, think about technology. So technology is like a human, right? Why would you expect a 5-year-old to have the capacity of you two guys, right? But why would I expect a 25-year-old to have the capacity of a 45-year-old? And so, but the growth is not linear, right? The growth is exponential. And so you look at a 5-year-old to a 15-year-old, a 15-year-old to a 25-year-old, that growth is spectacular. So as a technology matures, as we move closer into this digital age, you're going to get this incremental exponential growth. And I just say to people, you can't afford to ignore this, right? It's survived. And as it survives, now it's beginning to thrive. And we're in an S-curve adoption. And in an S-curve, what happens is you go from basically the early adopters, the first 1, 2, 3, 4% people, and those are the lunatic fringe, right? Those are the anarchists and the people that nobody really wants to be involved with. Then you get to some real people starting to look at it at the beginning of the S-curve. Then you go into what's called frenzy. And frenzy is when there starts to be some mass market awareness. And that's where we are today. Now, the problem is a couple of years from now, and I don't know exactly when, but a couple of years from now or 3 years from now, we're actually going to have a crash. And that's what happens. It's called the trough of disillusionment. And what happens is people start to lose faith in that technology. And the same thing that happened with the internet, right? The internet in 1993, 94, 95, nobody wanted to talk about the internet. Paul Krugman said, why would we ever need anything like a digitized encyclopedia? Come on, what do we need the internet for? And, who would ever buy anything off the internet? Who would put their credit card on the internet? So the internet was evil. And then it had this big bubble in 1999, and then it had a crash. Well, all the huge wealth has been created post the crash, right? The Facebooks and the Alibabas and all these giant companies that took the core components of the internet protocols and built great businesses around them. And the same thing's going to happen here. So we're building the internet of value. Right? If you think about technology, started with the mainframe in 1954, went to microchips in 1968, went to personal computers in 1982, went to the internet in 1996, went to the mobile net in 2010, and then we got the internet of value in 2024. So we're still 6 years away from the peak of this is really the new thing. So we're just at the beginning, and I tell people that, why would you not want to be involved with the next, technological innovation wave? Why wouldn't you put 1% of your assets in something that could go up 40x? It might go to 0 and you lose 1%. But if it goes up 40x, it changes your life. So why wouldn't you? There aren't that many things in the world, right? I mean, there have been many of them, Apple and NVIDIA and, plenty of individual companies, Amazon. Why wouldn't you do that? So the doubters and the people, the no-coiners and the people who want to poo-poo it, I just don't understand the logic, right? I mean, 5 years ago, fine. When Mt. Gox crashed, great. You want to say it's going to 0, down 80% in a day? Fine. That could scare you away. But what people forget, Amazon has been a public company for 20 years, and it's gone up, how many thousands of percent. Every single year, it's had a double-digit drawdown, including 2 90% drawdowns, and the average is 33%. Yet there has never been a good time to sell that stock. So faith, and that's a funny word because there's some people who say this is a cult and a religion, and it's, Nakamoto's like Jesus, et cetera. So it requires a leap of faith. It requires an embracing of let's say, a technological innovation wave, and so that's the big thing.
Well, Mark, this has been a blast.
Yeah.
Thank you so much for chatting with us.
No, great to be with you. Thanks for having me, and take care, guys.
Yeah, thank you.
Thank you so much. This CoinPod has been a production of You, Me, and BTC. As always, thanks to my colleagues Tim Baker and Daniel Brown, and also to Ethan for joining me for this episode. A big thank you as well to Mark for taking the time to chat with Ethan and me. Be sure to follow Ethan and Mark on Twitter at CryptoEthan and at Mark Yusko, Yusko, respectively. To stay up to date with each week's CoinPod, follow at the CoinPod on Twitter, and definitely visit thecoinpod.com to catch up on previous episodes. As always, we'll be back next week, so until then, cheers.
Hey guys, today's show is brought to you by Chronologic.network. Chronologic is an Ethereum-based project that aims to solve time-related problems on the blockchain. Through Chronologic's 3 core products, the Ethereum alarm clock, debt smart contracts, and the day token minting mechanism, they solve the problems of payment scheduling, crypto loan time constraints, and unstable token launches. Find out more at Chronologic.network.